What's up, guys? Today we're going to be talking about what I have in one of my portfolios and the allocation I have set for it. Later down the line, we will do, deep dives into certain companies I have inside of my portfolio. I kind of did one on MSTR a few weeks back, but I may even do another MSTR video diving even deeper into the reasoning why I'm going to be buying and holding on to that company. So let's just get started. This is going to be a quick video because I'm just going to be going over what percentage each company has in my portfolio, maybe some cost basis stuff, and kind of just explaining it briefly. Like I said, later down the line, I will be making like a full-blown video for some of these holdings. Like I will make a Google video at some point because my thesis on Google is part of the reason why I'm going to keep buying it over the next like 5 years. And keep in mind, this is not my entire portfolio. This is just one of my brokerage accounts. I have another brokerage account and a Roth IRA. Starting things off, I'm just going to talk about the Google position. It's 26.2% of the portfolio. As of Independence Day, I have a 54.1% gain on it, and I don't plan on selling it anytime soon. I'm just going to keep growing it and getting more. Google is just a great company, and I can see them being a 10, 15, $20 trillion company in the future. Moving on, let's talk about SOFI. This is actually the largest holding in my portfolio currently, but it's actually not in shares, it's in leaps. I have deep in the money $10 calls that expire in 531 days, and I just plan on holding on to it for at least a year, maybe a year and a half, 2 years. It really depends. The CEO's been buying a whole lot. I feel like they're not being valued properly. They've always been battered as a stock, and they're currently at like, I believe, $18.50 a share. I can see them hitting even 35 this year. Currently up about 5% on those calls, but I did lose some gains on Thursday right before we closed Friday, so I'm not worried about it. I have a long time horizon on those. Simply put, I can see SoFi being, one of the bigger fintech companies, and they offer so many things that people just don't realize. They think they're just the bank, but they're not actually a bank, and they provide so many services to so many companies that I feel like they're not being properly valued. It's a good company and it's still growing, so I feel like it's a good holding. Next largest holding at 22% even is MSTR, and I have made a video on this already, and I may make another one eventually, doing a deeper dive, but it's at 22% right now. When I made that video, it was about 12%. So I've already added, 10% of my portfolio's allocation into MSTR since that video. And obviously this is just like the meme where it's like, we're so back after a huge downturn, we have a few green candles and everybody's tweaking out. But I was adding shares, in the 80s and the 90s, and then now the stock is trading at about 101, 102. Also bought some calls of MSTU, and I sold those off for a quick gain. I bought a few contracts of it, and I sold them on Thursday, and I made about 52-ish% on those calls, so I could have held them for longer. They were also leaps. They weren't expiring until, I believe, it was 2028, so I could have just held them, but I just rather sell them off now and maybe acquire more shares of MSTR. While we're at it, we'll talk about STRC. That's 1.3% of the portfolio. I just got a few shares of it because it was at $74, and I was like, this is getting back to par, or at least close back to par within a year or two, so I might as well just get a little bit of it, get the gains and the dividends for a little bit. I just wanted to test it out a little bit. It's not really a large part of the portfolio, and it's not really an important part either. Strive, similar to SoFi, I don't actually have any Strive shares. It's just call options. They're all leaps. And I got some out of the money calls instead of deep in the money calls. These are deep out of the money. They're 35 strike, and they're for 2028, January 2028. So if my Bitcoin thesis is right, obviously this portfolio is very heavily concentrated into like speculation, Bitcoin speculation. But if my Bitcoin thesis is right, these calls will be worth quite a lot of money once Bitcoin recovers. And, if it sets new all-time highs before 2028, these calls will be worth a lot of money because Strive will be worth way more than $35 a share. Currently, Strive, as of today, is at $13 a share, and the position is up 3.7% on those calls. And if I go down on those calls, just the same way with SoFi, I've had ups and downs. I've been down on the calls. I've been up on the calls with SoFi since I acquired them a few months ago. It doesn't really matter as long as, next year it will start trending in the right direction. That ASST position is holding 19% even of my portfolio right now. And you can't see on there, but that little tiny slice is actually Bitcoin. That's the Bitcoin I hold within Fidelity. It's very little. It's like 0.8% of the portfolio or something like that. And you may be watching this and being like, what an idiot. This dude has so much Bitcoin speculation. He has calls on Strive. He has shares of MSTR, but he doesn't even hold any Bitcoin. He holds 0.8% of his portfolio in Bitcoin. That is just my Bitcoin holdings in Fidelity. I have a hardware wallet that I hold my Bitcoin in, and it would make up way more of my portfolio if I included that, but I do not include that here because it is not held in Fidelity. I only hold a little bit in Fidelity, so that's how much is being shown. The Bitcoin I hold in Fidelity, I bought back in like early 2024. And so it's almost at the exact same cost basis that like I bought some for like 48,000 and some for I think like 56 or something. So I'm pretty much break even on that. And I haven't transferred it out for some reason, but I've been acquiring Bitcoin and transferring it to my cold wallet through other sources and not Fidelity. So I don't really care about the Bitcoin that's on my Fidelity. I'm just going to leave it there. I'm not really worried about it. But that's just letting you know, no, I do not have all of this Bitcoin speculation and have like nothing in Bitcoin. I have a Bitcoin position. Last but not least, I have 4.3% of my portfolio in GameStop. And a lot of you might be like, oh, what an idiot. I'm not going to listen to anything this guy says. He has GameStop in his portfolio. GameStop is a lot different than it was back during like the meme stock saga. It's a legitimate company. It's making legitimate revenue. The guidance they just released, they're going to make, I think, 600 mil this year minimum. And they have $10 billion in a war chest. They have no debt. They have some convertible notes, but nothing serious. And they're currently making a push for eBay's acquisition. If they are able to achieve that, then obviously completely game changing for the company. If not, and they're able to acquire a different company, still could be huge for the company. I feel like people still have this perception of GameStop being this, meme stock that is going to, go bankrupt. But it is nowhere near bankruptcy. This is trading so flat. It'll go up to 28. It'll go down to 20. It'll go up to 34. It'll go down to 20. It's almost like a money market account that has a little upside volatility. I don't have very much exposure in this account to GameStop, but I do have more in my other brokerage account, and mainly I'm just looking closely for any major corporate news or any acquisition or anything, and I may exit the position. It really depends on how the price action plays out, but I feel like it's the most interesting stock on how it's traded in the market. They're trading at it like a 9 billion market cap, and they have like 9.5 billion in cash. It's very interesting. It's an asymmetric play. It will go down with the market, but it hasn't gone below 20 for over a year, and it just kind of trades around that area. So it's really not a bad opportunity, and selling calls on it and stuff in my other account has done me very well. And that's it. That's the portfolio analysis here. I have another one. I have a Roth. I have actually two other ones. So later on the line, I might analyze one of the other portfolios, but for now, this is this allocation. I'm feeling good about it. Obviously, very leveraged into Bitcoin. So if Bitcoin does really bad, you can assume that my portfolio is down very bad. But even though MSTR is at 22% even, I may still be adding capital to it. That's what I'm focusing on right now because it's still, now it did trade up. It's trading at about 100 now instead of, I bought some for like 84. But anywhere around this 100 range, I think it's a great value proposition, especially with Bitcoin trading up so far this month. And I'm ready to see the future. If you enjoyed the video, please like and subscribe. Leave me a comment if you think this allocation's, too risky or bad, or if you like it. Just let me know. Let me know what your allocation's looking like for your portfolio, and I will see you guys in the next one. Peace out.